Wall Street extended gains overnight, fueled by softer than expected inflation figures and optimism on the US-China trade truce. To go through the charts, Tony Sycamore from IG joins me. The trade war, not over, but we've got the president in Saudi Arabia as well. What are we seeing particularly in these big moves in oil?
Well, it's fascinating. 4 straight gains for crude oil overnight, and I think crude oil sort of settled into a range between $65 and $55. Now, we tested the bottom of that range a week ago, and I think there was an expectation it would break through there. But as you can see, it's left a double bottom in place down there around that 55.10 to 55.30 area. And as that held, it encouraged some short covering. Then overnight, you obviously, over the course of this week, you've obviously had the tariffs being rolled back significantly, which is now seeing bank and analysts within the community upgrading their forecast for GDP in the US and in China. So that's a good thing for consumption of crude oil. Additionally, you had the US dollar free fall last night, and that is also supportive for the crude oil price because you can buy more crude oil for the same amount of US dollars. So some good signs there for crude oil, but where it gets us is back up towards that resistance, which it failed from at $65 at the end of the middle of last month. And that to me is a very, very important level. If it can get above that 65 to 65.50 area, then you have that 200-day luring above at $70, and that would be the next upside target for me if this move is going to develop.
And when it comes to gold, given that there is this optimism now that the US potentially may not go into recession, that the trade antics have been cooled somewhat, people are downgrading their forecast for gold.
Yeah, there were some really bullish forecasts coming out at the end of last week and over the weekend. I saw one at 6,000. But now, obviously, the tensions have eased as a result of those negotiations and chats over the weekend between US and Chinese trade negotiators. And that has seen gold take a pretty sharp step lower. Now, it is holding support at $32 at this point of time. I suspect it probably needs to have another leg lower back towards $31.50. And if it can get down to that area and put some nice signs of basing in, I think that's probably the right level to be looking to open longs in gold, looking for a retest of that 3,500 high. I'm not calling 6,000, but I could see a retest of 3,500 up towards 37.50 into the end of this year, because we know that there is still some uncertainty out there in markets, Jules. We know that the reciprocal tariffs expiry for that pause is about 6 weeks away. We've got 3 months until the expiry of the US-China trade tariffs. There is a lot of uncertainty out there still. At this point in time, we're in a nice calm between the storm, if you like, but we do have some grey clouds off in the distance.
All right, well, what about the outlook for our market? We were expecting a bit more of a bounce yesterday and today. We're actually kind of flat today.
Yeah, I think given how far the ASX 200 has come, we're about 3.5% below the record high that you can see there in February, 86.15. We got up to a high yesterday, which took it to within 3.5%. Now, there wasn't that appetite to chase it at these levels, and there shouldn't be. As we mentioned, there's still uncertainty out here. We still have hits to GDP because US tariffs are, although they're being revised higher, they're not going to go back to where they were at the start of this year, because we still have probably an average tariff rate on US imports of around 15%, which is significantly higher than the 3% at the start of this year. That is a whopping hit to the consumer. It's a big hit to GDP. So I don't see the basis for a run at those record highs at this point of time. For me, we're going to be settling into a range. Now, the range probably is a little bit higher than what I thought at the end of last month. I suspect we're probably in an 8,400 to 7,800 range for the duration of May, possibly into June, into the lead up of that expiration of the reciprocal tariffs in early July.
All right, well, let's look at the momentum in the Aussie, particularly as we await the job starter coming through tomorrow.
I'm proud to wear an Aussie bull cap at this point of time, and it's something where you have to be looking at the price action there. A V-shaped bottom, as we spoke about down there at that 59.12 low. It did look like it was retreating from the 200-day moving average. Short term was overbought, and there were certainly some sellers lurking up there around that 200-day moving average. But overnight, it's refound its feet. And to me, this is a really good sign for the Aussie dollar. If it can get back above that 200-day moving average and then take out that high we saw at 65.14 last week, I think it can push up towards that 67.70 area, which is the 200-week moving average. So for me, the Aussie's doing the right thing. It's had a nice drive higher. It's worked off those overbought momentum readings. It's consolidated and it's rebuilt that energy for the next leg higher.
All right, Tony, let's look quickly at what we've been seeing in US equity markets. I mean, that huge bounce coming through in the NASDAQ yesterday, up another 1.6% overnight.
Yeah, good signs. I mean, the Magnificent Seven's back, right? I mean, we're seeing good signs there in the NASDAQ overall. It spent a lot of time just knocking at that 200-day moving average, chipping away. And then, of course, the news we got earlier this week, it's gapped higher and it's gone with that gap higher overnight. So in an Elliott wave sense, I think you've probably got a three-wave pullback from the record high down to that 16,542 low, which does signal it was a correction. And now, given the impulsive characteristics we're seeing in this NASDAQ and the resurgence of the AI trade, I think you can probably see the NASDAQ retest those record highs. So with, I think, some of the tariff news out of the way, it goes back to where we were at the start of this year, and that is the AI trade, and this is the forefront of that.
All right, and when we look at the AI trade and we look at cryptos, what's Bitcoin doing?
Well, I like what I've seen in Bitcoin as well. I've been wearing the Bitcoin bullish hat for quite a while now. I like the fact that it's broken above that 200-day moving average. It's pushed up just below its record high, and it started to consolidate. It was up 4 weeks in a row, and it was due for some consolidation. Now, that could take it back towards the 98,000 area to me, but it doesn't mean that this rally is over. And I suspect that when we do see the end of this consolidatory period, that Bitcoin will have a run at that record high up towards 125,000. So nothing's changed there for me. It's doing all the right things. It's looking really good.